Hello everyone, welcome back. If you are a returning subscriber, if you are new stopping by here, hi there, my name is JoJo. On this channel I share with you our family's journey through budgeting with the goal of attaining financial freedom. And for us, that is really, we are currently paying down debt, but starting this year I wanted to focus more on our net worth number. So we are also doing some investing and saving while we are paying off debt. But we are still primarily focused on paying off debt. I started with a six-figure debt, a little over $102,000 in February of last year. We are currently more than 60% of the way, a little more than 60% done with paying off that debt. And the final debt that I had to pay off was, that was interest accruing, was my student loan. I graduated college in 2010 with about $78,000 of debt. When I started this journey in February, that is exactly how much I still had to pay. So over the last 10 years, all I'd been doing with my minimum monthly payment was paying interest. And you guys, I feel like interest with these loans is really what has sort of suffocated a lot of Americans with this student loan debt, because the interest, how it is charged, it's very, the calculations that they use, it's not intuitive. And when you're fresh out of high school and then your parents really don't know, which mine certainly didn't, about interest and about student loans, it's like if you want to go to college, you just take out a student loan. And then you go to graduate and you look that what you thought was a $10,000 loan you'd taken out is now $15,000 that you owe. So it can be very overwhelming. And then when you're set up for your debt repayment, you just kind of follow the recommendations of the company, and they are not there for your best interest. They're serving the company. So really you have to educate yourself to be able to make your own decision. And this is me speaking to my past self. I had not educated myself. I thought that I just follow what they told me to do, make my minimum monthly payment, and that got me 10 years later owing the same amount of money. And then what I had done was refinance. I did have all federal loans. I refinanced the ones that were higher interest. They had a 6.8% interest to a loan company or a lender, and it was an amortized interest loan. I'm going to show you guys here what they had sent me, because I just paid this off. I posted a video, it may have been last week, I honestly can't remember, but it was about me kicking this velocity banking strategy into hyperspace. And velocity banking, if you are not familiar with it, is an interest savings strategy where you use two-way simple interest lines of credit, either a personal line of credit, home equity line of credit, credit cards, to pay off big chunks at a time on amortized one-way loans, consolidation loans, mortgages, student loan refinances, anything like a car loan, anything like that. Because look at this, you guys. I refinanced in June of 2018. It was $68,000 of 6.8% interest loans that I owed. I refinanced for 5% interest rate, so it was less than 6.8%, but it was for 15 years. But look at how much money, had I just been making my minimum monthly payment, which was $543.40, if I had just stuck with that for 15 years, I would have paid $29,000 of interest. So I would have paid $97,000, a little more than $97,000 for a $68,000 loan. Y'all, if you have a mortgage, a car loan, consolidation loan, go look at your amortization schedule. Go look at how much they are planning to charge you to just make your minimum monthly payment. That is way more than some like credit card companies will charge you. Now I don't have credit card debt. I'm cashless budgeter. I pay off my credit cards every month. But these amortized interest loans, they fool you, they lure you in with this nice low interest rate, but then bam, look at $29,000, you guys. That is a nice car that I would have paid for this. And I've already paid. I've paid for 10 years on interest. I didn't want to pay anymore. So that was enough for me. Once I saw that, I could not look back. I knew I had to do something different, and that's when in August of last year, we implemented the velocity banking strategy. I have a whole playlist on it, but the purpose of today's video is to show you guys how I track the accounts that are housed within our home equity line of credit, because that's what we use to pay down our that's our line of credit that we use to pay down or to pay off that student loan. I'll show you guys right here. So this is where I track, this is my paycheck budget sheet, but I owe a little over $40,000 on the HELOC right now. So that is how much money I borrowed from the bank, but that is not what they're charging me interest on, because I house all of these accounts within the HELOC. It's a two-way line of credit. I can deposit money in, I can pull money out, however I see fit. So in my bank, I have two accounts. I have a standard checking account, and then I have, actually three, I guess, and then I have my HELOC, and then I have my mortgage. That is, when I log into my app, those are the three accounts that I have. But I also have all of these other accounts that are housed within the HELOC that serve these purposes, that I need to track that money. Sorry, my kids are home around spring break. You can probably hear my teenager getting ready with the hairdryer. But anyways, I need to know how much money is available if I needed to pull out all of this money. So that's what we're going to do today, is start by seeing how much money we had deposited and pulled out. And then on the back of this sheet is where I have how that money is flowing so that I can add it all together and do the final tally. And then since we are cashless budgeters, I have some accounts that require a standard checking account, like bills that I have to pay that have to come out of my checking account. And because most of my bills, I try to put them on our travel card so I can rack up as many travel points as possible, because we're a family of 5 and to go on vacation, flights are expensive. But this is how I track the transfers that are coming up, and I'll set alerts in my phone to know when I need to transfer money from my HELOC into my checking to cover these bills and that sort of thing. I have in that playlist, I go more into that transaction log tracker, but purpose of today's video is to write down the totals of all of these. Okay. For checking, we ended up transferring in a total of $12,240. Oh, this is supposed to be written in green. Oh well, let's see, $241.22. And then I had taken out $10,916.11. That left us with $10,325.11 designated to that checking account. Then for the sinking funds account, I deposited $2,478.73. We had used $4,541.22. And then that left me with a remaining of $5,262.87. Now, if you had watched my February sinking fund closeout, these sinking fund numbers probably look familiar because they are an exact reflection of, sorry, I'm fumbling with my planner over here, this is my sinking funds of the money we started with, deposited, used, ending. Next is savings. I deposited $50 into, I keep wanting to use that pen, into savings one. We did not take anything out. That left us with $1,100. This is my emergency fund. I really only want to keep it at 1,000 as far as like cold hard cash that I can have access to immediately, but I am also building it up to purchase gold. So I have $100 right now. If I were to drop it down to 1,000 to buy gold or silver, I'm kind of wanting to build it up to about $500 so I can purchase the pieces that I want from SD Bullion. But I'm using the gold as another form of currency that's kind of a little more stable, as our currency, the dollar, can fluctuate. Next is savings, and I had deposited savings too. I deposited $1,010. We did not use anything, and that brought it up to $3,710. Okay, next is principal, and this is money from cash flow, from extra side hustle money, stimulus money that we are using to throw at this debt that's actually bringing the balance down. It can't be pulled out and used for anything. And that was $2,233.44 that we were able to pay in February. Nothing comes out of that. That totals, since this is our first one, $2,233.44. The interest that we had paid for this month was, oh, let me grab that pen. All right, I am so sorry. This is many days later. You guys were likely expecting this video to be posted on Sunday this week, but I had lost some footage. I had ended where I was going to write down the interest that I had paid for this month. And then when I went to edit, I didn't have any time to film because my kids are on spring break and we've been out having lots of fun. And then it was my work week. So here I am back again to let you guys know the rest of this Velocity accounts tracker and get this video uploaded for you guys. So sorry about that. But I had ended where I was going to tell you guys the interest that I had paid for this month, and that was only $53.94, which is amazing because I'd been paying about $150 to $200 in interest every month, even with the Velocity banking system. Then I had I'd done these totals down here. I'd forgot to total them as I was filling them out for you all, but these are just the totals. And since this is a kind of a reboot of this strategy for us, I cleared everything out. We're starting anew. This is our first month, so the interest overall is the interest for the month since this is our first monthly check-in. It's the $53.94. Next, what I do to find out this Velocity or the HELOC ending balance, or more so what the bank is actually seeing to charge interest on, you can see what the starting was. Now what the ending is, I take the $42,000 that I originally owed the bank minus the $22,631.42, which is the sum of all of these accounts that are in there holding that principal balance down. So that gets written as $19,368.58 as the HELOC balance. It's obviously not going to stay there the entire month. Just in this one snapshot of time, that's what the ending balance was. Because again, money is flowing in, it's flowing out at various times of the month. But that is how I handle the Velocity accounts tracker. Now what I'll do is get you guys switched over to my Excel spreadsheet where I show you the interest savings that I've had since starting this strategy. Okay, here we are at that Excel spreadsheet document I was talking to you guys about. Right here at the top is the snowball table. Had we followed the standard snowball method, these are all hypothetical numbers. Then down here is the Velocity banking table. These are the real world numbers that we're using. Over here is the dollar difference in interest savings. And then this is the total potential interest savings until the completion of the loan. I obviously did not drag my calculations all the way down until the completion of the loan, but this is going to go to zero anyways because that has been paid off. Actually, I think I may have done that last week. I just dropped it to zero. So now what we'll do is plug in the actual numbers. We're going to first start here at the snowball table. What did we actually pay for our snowball in the month of February? That comes from the principal amount that's on that velocity accounts tracker. That was the $22.33.44, and then that automatically updates. We paid off this loan in February, so in March it's starting at zero. The interest that we actually paid to the lender was that $25.30. The interest that we paid towards the HELOC was $53.94. Okay, then you can see over here, our interest savings this month was $100.59. What we have saved overall has been, since we started this journey, is $391.23 of interest, you guys. So of that $29,000 that they wanted to charge me, since I started this, I've already paid them quite a bit of interest because I'd had that loan for 3 years. But just since starting this in August, I've already saved $391, which is so exciting to see. We're going to implement this strategy towards our mortgage, hopefully by the end of this year, beginning of next year. And really, I looked at our amortization schedule there. We're pretty much would have bought the bank another house had we followed the plan that they had for us on that loan. But more to come on that later. Anyways, this is the final update for my monthly check-in on this velocity banking strategy. If you did enjoy this video, please give it a thumbs up. If you are enjoying the content of this channel, our unconventional budgeting system, us sharing our journey with you, please consider subscribing, and I will see you guys next week for my week 2 check-in for paycheck number 1. Have a great week, everyone.